Hi everybody, this is Lara with your weekly video for gold for the week ending Friday 9th of December 2022. The preferred Elliott wave count remains bearish, but price doesn't move in a straight line. Within a bear market there will be bounces and consolidations. I expect a bounce is going to continue a bit higher. Let's expect resistance in the first instance, about 1827.65. After that, if price keeps on rising through that first area, let's look for next resistance about 1844. To the downside for the bear market, the first target at cycle degree is 1037 and the final target years away is at 657. The bullish wave count has a bullish target at 2526. Elliott wave analysis first, classic analysis last. The Elliott wave count expects that a huge grand supercycle expanded flat is unfolding, labelled Grand Supercycle Wave 4. Within the expanded flat, here is Wave B ending and the start of Wave C. Supercycle C may only subdivide as a 5-wave motive structure. There's only 2 motive structures, either an impulse or an ending diagonal. An ending diagonal requires all of cycle degree waves to be zigzags. And so if this is correctly labelled here for cycle 1 as a leading diagonal, it's not a zigzag, so we should be able to eliminate an ending diagonal for supercycle C. I hope that makes sense. Within supercycle C, unfolding as an impulse, it'll be labelled cycle 1, 2, 3, 4, 5, and it has to meet all of those core Elliott wave rules for an impulse. Within the impulse, cycle 1 must be a 5-wave structure. It is. It's a leading expanding diagonal. Cycle 2 must be a correction and may not move beyond the start of 1. It hasn't, and it is a correction. It's a zigzag. Second waves following first wave leading diagonals are commonly very deep. This one is very deep, fitting a normal pattern for this part of the wave count. Cycle 3 must move beyond the end of cycle 1 and may only subdivide as an impulse and can't be the shortest out of 1, 3 and 5. Then cycle 4 has to unfold, may not move into wave 1 price territory, and cycle 5 usually moves beyond the end of 3 to avoid a truncation and may only subdivide as a 5-wave motive structure. Within cycle 3, it may only subdivide as an impulse, and it has to meet all of those same Elliott wave rules that I just went over. Within it, primary 1 may be a complete impulse, primary 2 an incomplete expanded flat labelled intermediate A, B, C, subdividing 3, 3, 5. Intermediate C extremely likely to move beyond the end of A. It has done so now. It's avoided a truncation and a very rare running flat. The structure looks like it's got just a little bit more up to go to complete. Primary 2 may not move beyond the start of 1 above 2065.89. When primary 2 is complete, this wave count is very bearish. It expects a third wave down at primary degree within a third wave at cycle degree. The target for cycle 3 is for it to reach 2.618, the length of cycle 1, at 1037. That's the Fibonacci ratio I'm using for this target because cycle 2 was so very deep in relation to 1. So the starting point of 3 is a lot higher, so a longer target. If that makes sense, that should make sense. Let's take a look at the daily chart level with the end of primary wave 1. I think it's this point here. Now we're zooming in on the whole structure of primary 2, an expanded flat correction. These are actually pretty common Elliott wave corrective structures. Within an expanded flat, labelled intermediate A, B, C, it should subdivide 3, 3, 5. Intermediate A subdivides as a 3, this is a zigzag. Intermediate B also subdivides as a 3, this is a double zigzag. Intermediate B is a 1.53 length of intermediate A, a little bit longer than the common range of up to 1.38, but certainly within allowable limits of up to 2. Intermediate C has to subdivide as a 5-wave structure. The first target for it is for intermediate 2 to reach the 0.618 Fibonacci ratio of intermediate 1 at 1827 I'm so sorry, this should read primary 2 to reach the 0.382 Fibonacci ratio of primary 1 at 1827.65. I'll fix that before publication of the article. After that, if price reaches the first target and keeps on rising, the second target is for minor 5 to reach equality in length with minor wave 3 at 1844. Intermediate C subdividing as an impulse with minor 1, 2, and 3 complete. Minor 4 probably complete here. Be pretty brief though. It is actually entirely possible it could continue sideways as a flat or maybe even a combination. If it does continue, it may not move into wave 1 price territory below 1727.76. If I were to label minor 4 continuing sideways, I'd label it A, B over at this high, and then C to come down, or could be W, X, Y to move sideways. It could also be a triangle, so it's not, we can't be definitive that it's over at this low, so I have to leave the invalidation point back here, unfortunately. At the weekly chart level, this is a bullish wave count. If your own analysis for gold is bullish, you may use this as your Elliott wave pathway. This wave count considers the bear market in December 2015 at 1046.27 over, and there a new secular bull market to last possibly generations has begun. Within it, super cycle wave 1 and incomplete impulse, with cycle 1 and 2 complete off to the left of the chart. Here is the end of 3 and 4 and the start of 5. The target is for cycle 5 to reach equality in length with 3 at 2526. There are multiple problems in terms of Elliott wave for this wave count, so in terms of Elliott wave, I judge it to have a lower probability. I've outlined some of those problems in the text article, but on this chart, one of the problems is the structure of cycle 4. It's labelled as a double zigzag, but it's essentially a sideways movement. Double zigzags shouldn't be sideways, they should have a strong counter trend slope. In order to achieve that, the X waves are usually, almost always, relatively brief and shallow. This one is neither. And wave Y almost always moves reasonably beyond the end of W. This one's only moved a little beyond W. So this part of the wave count just doesn't have that good a look. But we will consider a bullish alternate. It's important to always have alternates. If cycle 4 continues further, it may not move into wave 1 price territory below 1303.51. At the daily chart level, the low of intermediate A, the high of intermediate B. Within primary Y, here's the high of intermediate B, the end of intermediate C to end cycle 4. Cycle 5, an impulse with an incomplete intermediate wave 1, minor 1, 2, 3, 4, and 5. Could even be over here. Probably, though, going to move a little bit higher. Look out for resistance at this trend line. When intermediate 1 is over, and it could be over already, then intermediate 2 should unfold, should last a few weeks, should be probably a deep pullback, may not move beyond the start of 1, below 1616.14. At the weekly chart level, this week completes a doji with a long lower wick, upwards movement, and the candlestick is green, lacking push from volume. Overall, the last 3 upward weeks have relatively weaker volume. This week here was quite strong, but now this upward bounce is just losing momentum. And so this supports the Elliott wave count. It expects that this bounce may actually be ending sooner rather than later now. On balance, volume is within a weak range. The yellow resistance line may assist to halt a rise in price. If it is breached, it would be a weak bullish signal because it's only got 2 prior anchor points, although it is horizontal and not too short held, so it would still be a bullish signal. But so far, on balance, volume remains within that range. No signal at the weekly chart level this week. ADX is declining. There's no clear trend at this time frame. RSI, money flow all neutral, stochastics overbought, price not really that close to resistance, but stochastics only just now overbought. Price may not reach resistance at 1915. Stochastics suggests the upward swing may be over sooner rather than later, which fits the Elliott wave analysis. The main Elliott wave count also fits the alternate at this time. At the daily chart level, here we see quite a weak volume for the last few upward sessions compared to stronger volume for downward sessions. The previous strongest volume, though, this good upward session, but Volume has declined since that day. Support now at 1795. The moving average situation overall bearish, but not fully so. Price now above the 200-day moving average, but the 50-day remains well below. A weak bullish signal from on-balance volume at the daily chart level suggests a little bit more upward movement next week. That supports the main Elliott wave count, also could be the alternate. ADX indicates an upward trend and RSI isn't overbought, so there is room to go before this trend reaches extreme and in danger territory. Money flow also neutral, stochastics entering overbought but not there yet, ATR declining as price rises. That's all from me with your gold analysis. I hope everyone's looking forward to an awesome weekend.